Well, good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah, and it's probably not going to turn out to be as good a day as we've been used to for the past few. But let's tell you all the important things that happened in the session yesterday and of course today. While all eyes are out on for the elections, there is a Fed meet which happened as well, and in the views of a lot of people, what the Fed is doing is the more important thing. So Jerome Powell opened the door to a possible shift in the central bank's bond purchases in the coming months, saying that more fiscal and monetary support is needed because the COVID infections are rising. He said this, and I quote, "At this meeting, my colleagues and I discussed our asset purchases. We understand the ways in which we can adjust the parameters of it to deliver more accommodation if it turns out to be appropriate." I think what Bloomberg Economics is making out of it is that the Fed may decide to shift the asset purchases towards longer maturities. I read out what Bloomberg Economics is saying, that the Fed may decide to shift asset purchases towards longer maturities in order to constrain any rise in long-term bond yields. The central bank will ramp up discussion of its balance sheet policy framework at the coming meetings. So that's the long and short of what the Fed did. Now, what was underway is was a pre-election rally, which has now gotten settled, I think, because the Dow futures are trading very, very quiet. So never mind what the US markets did yesterday, and they did reasonably well in yesterday's session too. I think the futures have cooled off a little bit, and maybe that's why the rally in Asia will not have the kind of steam that probably people believed it would normally have. So if you just bring up what the Asian screen is doing in the session today, or if you bring up what the SGX Nifty is doing in the session today, you will see that the spunk is not as pronounced in Asia as it was in US yesterday. And the SGX Nifty 2 will probably give you an indication that we are a start, which is maybe marginally lower or flattish in the session today. And that is probably not a bad thing. I mean, it's a weekend. We don't need the rally to just rise incessantly, but to probably cool off a little bit. A bit of a healthy pullback is probably necessary too. But yeah, we might have a start which is slightly skittish in the session today. So you have to bear that in mind. Now, what does that tell us about the trade setup? Really, that's the key thing, isn't it? So I do believe that the markets could take a breather today due to the pause in the global rally. So we may have a bit of a pause today. A Reliance Industries led uptick is not ruled out though if banks don't crack. Now remember, if banks behave, and they've had a really good run, and if they don't pull back a bit, and FIs are pumping in money, so banks might actually do okay. But if banks don't crack, and if Reliance does indeed do well, then you might actually have a better day for the Indian markets compared to the rest of the world. And I think when you look at the companies that should be in focus today, city gas distribution, cement, and oil marketing companies will probably continue to remain the top draws. We're watching out for results. So we're watching out for what could happen to Cipla. We're watching out for what could happen to ITC in terms of the results today, as well as watching out for Vedanta, Ashok Leyland, and Glenmark, amongst the others. And also, consumer businesses like Tata Consumer and United Breweries should also be in focus. I wouldn't rule out Balkrishna Industries. That's the other one that people should be watching out for. Apollo Tyres and some of the others did okay. It would be interesting to see what BKD does too. Now, in terms of stock movers in the session today, I would watch out for Reliance Industries. Saudi Arabia's PIF will invest over 9,500 crore rupees in Reliance Retail Ventures. The investment values Reliance Retail at about 4.58 lakh crores, which is higher than the previous transactions. Keep in mind, there were a lot of WhatsApp forwards yesterday about what the Reliance Industries GDR was doing because the Ambanis made their presence felt in the IPL. And amidst all this conversation and talks around what could be happening to Mr. Mukesh Ambani's health, this move tells you that the market probably took heart from the fact that the GDR went up in trade. Now, yes, it was positive. Does that mean that Reliance Industries will start off well? Probably. Let's wait and watch if that does indeed happen. I think a lot of it would depend on how Reliance, a lot of the market movement too could depend on what Reliance does today. So let's wait and watch what the move is likely to be. But this investment into Reliance Retail isn't too bad either. Now, cement stocks, and two of them remain in focus today. Birla Corporation, a primary one. The numbers, revenues were up marginally, about 2%, but both EBITDA and profit after tax were well ahead of street estimates. That's the key thing. 23% jump in EBITDA, 90% jump in PAT, really strong numbers. The results, as I said, were above estimates, but they were driven by lower OPEX and higher realizations. That's the key thing. Realization for Birla Corp declined mere 1.5% on a quarter-on-quarter basis. In the monsoon quarter, the realization stayed firm, and they have said that they aim to achieve 25 metric ton capacity by calendar year 25. They've announced CapEx. A cement company has announced CapEx, and this shows the confidence, and I would reckon that the markets would reward these numbers. The other one is Dalmia Bharat. Now, the numbers were good. Revenues were up about 7.78% at 2,410 crores. Net profit, 232 crores versus 27 crores, which shows you the extent of the outperformance. The EBITDA was up 49%. Margins are healthy, 29% versus 21%. So blockbuster numbers. But more importantly, two other factors that may click for Dalmia Bharat today. They repaid gross debt of about 754 crores in the first half. And ex-Infosys Rajiv Bansal has joined as ED at Dalmia Bharat. I think it's a very cheap stock on a valuation front compared to some of the larger peers. Their capacities are large. I think by the end of the year, they might have 35 million metric tons capacity, 35 million metric tons capacity, and that is huge. Just that it didn't get the valuation. I think joining of key personnel should actually augur well for Dalmia Bharat. Do watch out for this one too. So two cement names, Birla Corp and Dalmia Bharat, would be in focus. I think the other one which people should keep a keen eye out for is Gujarat Gas. Again, I just dissect the numbers very quickly. Revenues up 131% quarter on quarter. Net profit, substantial jump. EBITDA up, margins up. Now, you would say all of this is anticipated, right? Because quarter one, the activity was muted. And therefore, quarter on quarter comparison will always show good things. I agree, yes. But the point being, the salient features wherein the sales volumes and compared to pre-lockdown and compared to pre-COVID have all moved up. So the current sales volumes are above the pre-lockdown levels. The CNG sales volumes are at 90% of the pre-COVID levels, and therefore I would presume that this should augur well for Gujarat Gas in the session today. Brokerages have had a mixed view. Motilal, nobody's raised target prices. Macquarie's maintained the positive stance. Motilal Oswal has maintained positive stance. Just that Macquarie says the target is 330. Motilal Oswal says it's 440. And that's what makes the market, isn't it? Do watch out for Gujarat Gas. Lastly, good numbers by Concor and Godavari Power. So I will watch out for both of these. Just that in Concor, you have to mind the fact that the higher demand for the LLF by Ministry of Railways is probably a bit of a negative. Let's wait and watch how Concor reacts in the session today. And Vinity Organics didn't have the best of quarters. Everything below estimates, really. Revenues, profit, EBITDA, everything below estimates. Mind you though, the management had guided to this when they spoke to us about 20 days back. So the smart money knew that Vinity Organics will not have a really large, strong quarter, quite unlike SRF. So not surprising is what you got to keep in mind. The stock has corrected a bit already. Be mindful of that. Last but not the least, what stood out for me today is the fact that late last night, NPCI has allowed WhatsApp payment service to go live on UPI. I would urge all of you to go out and try and read about this. This is a big news. It was expected for a while. It was not going through. It's finally gone through. And this could be disruptive in nature for payments on UPI. And I think people should watch out for this. This is a big, big development. So be mindful of that. So in terms of what the market should be watching out for, Reliance Industries and how it does and whether banks play ball, in which case we might actually have a good day. Watch out for the cement companies, in particular, Birla Corp and Dalmia, but they should keep the argument around cement very, very strong. So be mindful of that. Gujarat Gas is the other one that I would certainly be watching out for, and keep an eye out for what updates come in from the US. Thanks so much for tuning into the Trade Setup today.